Hi, and welcome to My Tech Opinion, a new podcast that covers the world of tech with an Australian slant. Each week, we'll give you some update in the local news and we'll go into a deep dive topic. On our first episode, the deep dive will be on cryptocurrency. So we're going to start it right after this. And welcome to My Tech Opinion. My name is Phil Edwards. I am one of your hosts today, and I'm sitting here in Melbourne. And in Perth is my co-host, Shayne Johnston. How are you today?
I'm well, Phil. Yourself?
Good. Thanks for having us aboard. You're doing all the button pushing and the mixing over there in Perth, and I'm sitting here in Melbourne talking nonsense, which is going to be a regular thing that we do on My Tech Opinion. But I think we better give our viewers and listeners a overview of the show and what we're going to deliver them every week or quite regularly over the next many years to come, we hope, or at least the next few months to start off with. My Tech Opinion is a podcast that we look at the opinion side of things in the world of tech. And as I said at the start, it with an Australian slant. I know that I have some weird opinions, and Shayne does too on various topics, which we'll get into later. And in our normal shows, we're not going to do it this week, but in our normal shows, we'll also give you a quick bite-sized recap of what's been happening in tech news in the past week. So Shayne, just to introduce our viewers and listeners, tell us a little bit about yourself and what we can expect from you as part of this new program.
Well, as you've already said, my name's Shayne. I'm from Perth. From a technology standpoint, I have got about 15, 20 years worth of experience in the IT industry, primarily with desktop support and service desk type work. I've always had an interest in technology. I've been following podcasts for at least probably 10 years, starting as a fan of Leo Laporte and Twit.tv. Other viewers may have heard me on the occasional episode of Aussie Tech Heads. Yep. So I'm looking forward to branching out and doing a show of our own.
Awesome. As for me, as I said, Phil Edwards, and I also am a part of a podcast and radio show based out of Melbourne called Geeks Interrupted, and we do it out of a community radio station called 3WBC in Box Hill. So feel free to listen to that. We cover off on the news, but this is more about our tech side of things, or the opinion side of things. But in terms of my background, I've had an interest in technology and gadgets and all random things. There's bits floating around this room that you can't even see on a regular basis. But on top of that, I also work for a federal government department in the IT security area as well. So I have a bit of a personal and professional interest in what's going on in the world. So hopefully I'll bring a little bit of that expertise to our listeners, whether it's a valid expertise or not. But really, we're all about our listeners as well, aren't we, Shayne? We're going to come up with some topics, but if there's something you want us to talk about, you want to give us feedback, you can see at the bottom of the screen, there's our email address, mytechopinion@prosumerit.com, and you can email your suggestions and thoughts through to there. Now, the one thing is, we've got, as I said, the email address, mytechopinion@prosumerit. Shayne, you're the prosumer IT side of things. Tell us a bit about what prosumer IT is and how that fits with our little podcast here.
Yeah, absolutely. So prosumer IT, the idea behind that was a place that not only where you could find this show, My Tech Opinion, but it's also the idea behind it was also to have reviews about equipment, about hardware, about software, that kind of thing. The plan down the track would also be to maybe have some other technology or other podcasts as well. So it was kind of like, I guess, for the want of a better term, kind of the network.
Yep.
My Tech Opinion was just one of the shows, and the kickoff show that is going to be on top of Prosumer IT.
So hopefully we'll get some blogs and everything on there as well, and some of our other random thoughts onto that website as we go along. So we're happy to do that. So as I said, normal shows we're going to be doing some news recaps, but we are going to do a long form discussion. And as we get more settled into our new podcast world, we're hoping to have some guests on to provide their expert opinion as well on how things are going. So, but tonight, or today, I should say, it's tonight when we're recording it, we are going to talk about cryptocurrency and particularly Bitcoin. In the current world, Bitcoin has jumped up to around 15,000 US dollars. It could be above that or could be below that as we speak in terms of value. When going back only so far as about 5 or 6 years, it was worth only about 20 US dollars. I have concerns about why it's got so much value. Where has it come from? And, is it worth investing in? So we're going to talk a bit about that tonight. And we'll go from there. So, Shayne, do you want to? Should I go through a bit of a quick background on what a cryptocurrency or a Bitcoin is to the people who are not quite sure?
Yeah, absolutely. I think we should cover what cryptocurrency is, the kind of technology behind it, a bit of the history. I've got actually prepared a chart that we can show the viewers and the listeners.
Awesome.
About the top three kind of currencies, which would be Bitcoin, Litecoin, and Ethereum, and how they've kind of traveled over the last month, the last year, that kind of thing.
Great. So basically, a cryptocurrency is a currency that doesn't really exist. It's not backed against any government. If in Australia, the Australian dollar is backed against the Australian economy and how the government performs and how the overall market is. Same as with other currencies like the US dollar, the Chinese yuan. But a cryptocurrency exists purely in a virtual world, and it's created by, and I'm going to get this right, but it's around where the demand is based around a trading. So the currency is traded against different users or held in a secure store. And when those trades occur, those secure stores will, and I'm completely stuffing this up, I can tell you that right now, but it needs a distributed computer network to handle those trades and the crypto. So you can set up, anyone can do this. However, there's some pitfalls which we'll come to. Can have a computer that acts as a Bitcoin exchange machine, and once again, I'm not going to use that terminology right. And it will, in exchange for you handling that transaction and that worldwide repository, you get paid in Bitcoin. So I think the current amount that it costs, the amount that you're available is about 6.5 Bitcoin per trade or something that you do. Now the thing is that, so you go, well, I can get 6 Bitcoin, which is worth $100,000, but it's based on a supply and demand. So people have to want Bitcoin to push the demand up, and then actively trade it. You then get, but then to generate the power to support that store is quite expensive at the moment. So and I think it's limited by the amount of Bitcoin that's going around at the moment. So I think they've got 1.5 trillion. I'm going to get that figure wrong, but they've got a certain amount going around. And if all of a sudden someone was able to generate a lot of that storage thing and flood the Bitcoin market, it would drop the price.
It's kind of it's like the supply and demand kind of thing. So
yeah, absolutely.
So the more there is of something, the less value it is. Just to kind of go over the stuff that we've kind of covered from what I know of how it all kind of works. The currency is kind of something that sits on top of an underlying technology called blockchain. So
Yes.
blockchain is, as I understand it, it's like a way of recording transactions. It's like a journaling system, and that's where all the computational power is kind of used when you're creating currencies, whether it be Bitcoin, Litecoin, or Ethereum. The With blockchain, again, as I understand it, the use for blockchain isn't just isolated to cryptocurrency. I believe that we may even touch on this a little bit later, but there was an article out in the during the week where it said that the Australian Stock Exchange was actually going to move to blockchain technology in the way it tracks all the movements on the stock exchange, for the
Yes.
buying and selling of just normal kind of stock.
So yeah, and you're right. The blockchain component of Bitcoin and the cryptocurrency market, I think, is the big thing that's going to come out of this current surge. So whether your currency drops, increases, does whatever it does, that's irrelevant, because the blockchain, that code that's underlying that confirms, whether it be identities or things like that, will be there. Because at the moment in the standard banking system, if I said, well, Shane, I'm going to transfer you $100, I can put in your BSB details, I can send you that $100, and you will look in your bank account tomorrow morning and there's an additional $100. So we've confirmed that transaction's occurred by the fact that $100 has left my account and $100 has gone into yours. So that those ledgers even up, and that's how we know it works. Whereas the blockchain will actually follow that transaction through. It can actually verify the originator and the recipient as part of that transfer process. So that's one thing, and they're looking at doing that, whether it be, as you mentioned, the stock exchange. They're also looking at it from a property transfer perspective. So your house title could be part of a blockchain transaction as well. Talking about the energy usage. So it says the Bitcoin network maintains its shared transaction ledger called the blockchain, as we've just talked about. A computationally intensive process called mining. Miners compete with each other for the right to add blocks to the blockchain. Each comes with a reward of 12.5 Bitcoins, or at the time the article I'm reading here from Ars Technica was written, around 125,000 US dollars. Because electricity is the biggest cost for Bitcoin mining, and this is a competitive market, we should expect miners to keep spending more and more money on electricity until electricity spending is on par with the size of the block reward. One of the back of the envelope calculations suggested that each Bitcoin transaction uses 271 kilowatt hours of electricity, enough to power a typical American home for 9 days. Now that's huge. And part of the reason for this is because there are people around the world, I think there's some in Russia and there's probably a number in China, who are setting up server farms that are designed specifically as miners. So going back when the Bitcoin was worth $1, 10 years ago, I could set up a laptop at home, let it run, and it would continue to do that particular process. And I think I'm getting a thing on my screen saying my internet connection is unstable, which we'll talk about another time. But yeah, so the thing is, you could do that now. It's come to the point that with the amount of electricity that you need to use, as well as some specialized equipment, usually high-powered GPUs, it becomes very expensive to mine them. So really, people are needing to probably purchase, unless they've got the hardware to do it. And then there's only a limited supply. So at the moment, so that's growing by, as we said, 12.5 blocks. You get 12.5 Bitcoins per block. But then the market wants that a lot more. So if another cryptocurrency comes along, like you mentioned, Ethereum and things like that, and the demand drops for Bitcoin, then I can see it falling out very quickly, or someone competes enough to create enough Bitcoin to inject more into the market. So, the thing is, it's a very unscientific process on how it's generated. And my concern is that we talk about all the value of it and should we get in, I just don't think it's stable enough. What are your thoughts?
No, I don't. And what I might do at this point is put on the screen a chart that shows
there you go.
This particular one. It shows the value of Bitcoin over the last year and how it kind of back in April 2017 it was pretty much worth next to nothing. It was like a few $100s, and in that sort of less than 12 months, it's skyrocketed. And if you got in early enough, you would have made a killing.
And the thing is, it's that risk of holding on to it. As we said, it was worth less than $1 in 2011. So that's, you're going back to December 2016. It was $789. It's increased massively since then. But the figures are just phenomenal on the growth of this particular thing. And there was someone that paid, I'm seeing if it was listed in this article. Someone paid for pizza with 10,
two Bitcoin or something.
Yeah, it was some major figure.
Yeah, back then I think it was worth, before it was even worth $1.
Oh yeah. When the Bitcoin network was first created in 2009, Bitcoins were barely worth anything. Bitcoin law holds that the very first real-world Bitcoin transaction occurred in May 2010, when one early Bitcoin user paid another user 10,000 Bitcoins for 2 pizzas. So, and if we said, 10,000 times by what's it we sitting at the moment? 18,000 US. That's a pizza that's worth $180 million.
Yeah.
Now,
but
I think it's well digested by now, though.
Exactly, and the important thing to remember, and I think people are going to be more on top of it now that it's got some value behind it. But in the early days, people, I don't know if they were taking it seriously or not, but I know of 2 or 3 people off the top of my head that bought into it, got their wallets, and a wallet, just to kind of explain that, is a virtual safe, if you like, that actually you keep your currency in. And
quite interestingly, for a virtual currency, you can have your wallet on a piece of paper.
Oh, really?
You can write it down on a piece of paper. You just need those crypto keys.
It's the key
to get into it.
It's the code. But the important thing is if you and you really should, if you password protect it or encrypt your wallet, you must remember the password like any other password. There's been that many people that have got in early and then it's skyrocketed and they've forgotten their password. I was watching the Screensavers last weekend, and Leo Laporte was talking about it, and he had a wallet that he couldn't remember the password for, and the amount that it's worth, if you could get in, I think was like about $100,000.
Wow.
Yeah, so not good.
No, not good at all. So, that it's there's all these possibilities if you can get into the market. So the other thing that's interesting is that there's 2 other main competitors out there in the cryptocurrency market. I mean, you can set your own cryptocurrency up as well. But back on that particular slide you had, that you said we had Bitcoin around $18,000, and then you've got Ethereum at 725 and Litecoin at 321. There's the thing for users out there. There's no intent. There's no one's not better than the other, except that Bitcoin is the flavor du jour, so people are after that. If there was a run on Ethereum, then people will likely jump in as well. And you can see there that Ethereum has had some ups and downs, but it is seen on a steady rise. So, looking at another cryptocurrency that you think, after doing some research, you think might have some long-term validity is probably one of the ways to go there as well.
Just on the volatility of it, and I'm not an economist by any stretch of the imagination, but as I understand, just general economics, even with normal currencies, there's some sort of predictability with it. Like if the economy does a certain thing in a certain country, their currency does a certain thing, which then either positively or negatively affects our currency, and same with stocks, or stocks. If a company does well, then their stock usually goes up. If the company does bad, the stock goes down. So there's some sort of predictability, or there's some sort of relationship between something happening and there being like a cause and effect kind of thing. Whereas Bitcoin and any of the other cryptocurrencies, there's no rhyme or reason why they go up or why they go down. I guess all the media kind of coverage that they're getting at the moment probably helps them go up, but
absolutely,
yeah, that's the only thing I can put it down to.
And look, the interesting thing is that you've now got a Bitcoin futures market in the United States, which looks at, you can speculate on the value of it in the future. You can either undersell it or oversell it. So that will change things a bit. That settles it back into, that goes the next step into sort of normalizing it as a part of a regular currency transaction. But look, one of the things that if Bitcoin becomes stable, that it does have a real potential for success as a long-term currency, regardless of whatever the value is, but will be around international transfers. At the moment, you would obviously, if you're a business and you were transferring lots of money across jurisdictions into different currencies, you would need to convert it into a base currency. For most people, it's usually the US dollar, and you would go across that. Whereas Bitcoin, it's a lot easier to get money in and get money out from a cross-jurisdictional perspective, because you can get it into a single currency type that's not pegged to an economy, and providing that the figure of the Bitcoin, providing the value stays stable, because you don't want to transfer money in and it drops through its backside before you can actually turn it into your own currency. You've got some options there. The other thing with Bitcoin that's that I was going to mention, and now I can't remember it because that's really bad of me, was, I don't know. There you go. I went on a train of thought there, Shayne. This is something that our listeners and viewers are going to see happen quite a bit. I will barrel on a train of thought, need to side swerve it, and I will fail miserably. I warn you now.
What I might do is I've just kind of prepared the next little slide kind of thing that has a list of the countries that actually have Bitcoin or cryptocurrency in general that are either restricted, regulated, or unregulated. So I might actually click on that and bring that up. So let me just go through the list. So as you can see at the top of the list there, we've got the I'll just scroll back up so you can see it. The countries where most or all of Bitcoin or other virtual currencies are illegal: Bangladesh, Ecuador, Thailand, and Russia. I'm going to go with Kyrgyzstan. Yeah.
Yep.
And then restricted, we've got China, but there's some sort of disclaimers around that. Iceland, and again Taiwan. Regulated, as we kind of go down the list, the list of countries gets longer and longer. Regulated, there's a few more. Unregulated, the bulk of countries have got Bitcoin and virtual currencies unregulated. Now, I don't know whether that's because they're free-thinking countries or whether they don't understand the technology or the currency, and it's just kind of early days, and those unregulated kind of countries may become regulated as time goes on.
Look, the interesting thing about it, and is that if you look at Australia, for example, because of course we are in Australia, the one of the things is that the transacting of Bitcoin is not illegal, not regulated, as you said, but where they do get you from a regulation is when you then go to cash that out into real currency. So if you went, I bought 5,000 Bitcoin in 2011 at $1, I'm now going to cash it out and it's going to be worth 90 million or whatever the figure is that is when the Australian government will look at that. Bitcoin traders who convert into real currency are required to report to the Australian government. If you are cashing out more than $10,000 worth, you are required, from my understanding, to pay capital gains tax on any capital gain that you've earned on that sort of thing. So there is a good website. If you do a search on the ATO website for Bitcoin or cryptocurrency, they will have a lot of information on it there. But when you, as I said, when you get it, when you cash it out, those transactions are required to be reported to the government. And then if there's a tax event there, then you're going to have to pay it. But to be perfectly honest, if I had quite a number of Bitcoins from the early 2011, and I can cash it in now for a few $100,000, I don't think I have an issue paying capital gains tax on the money that I've made of that. But it's doing it when you've bought into it or mined it, and then you've had to cash it out, that it could hurt a little bit more. So that's the thing for miners as well. If you're going to mine, you need to take into account potential capital gains tax implications of you doing that. You would need to talk to a registered accountant, I will say that. But you may be eligible, if you're going to be mining, you may be eligible for tax deductions on your electricity, for example. So it's an interesting thing to look at. The question I was going to ask you, though, Shayne, is do you own any cryptocurrency?
No, I don't. I am not an early adopter when it comes to any technology. Given that I work in the IT industry and have done for so long, I was a late adopter for online banking. I was a late adopter for paying things with your mobile phone. I am just really kind of reluctant to get into the technology until it's like proven to be safe or to be stable. But the downside of that, especially with cryptocurrency, is in my case I've missed the boat.
Yeah, that's fair enough. I haven't invested. I've thought about it, and I've started to read up a bit about mining and went, yeah, that's not going to work for me anymore because I think it's gone out of my realm. But that's I'm probably conservative though. The thing that people need to understand as well, particularly in Australia, your money's probably safer in a bank. The government underwrites any bank, or a lot of bank deposits, where if you lose, if you have money trying to get traded and they fall over, you are dumb out of luck, to be perfectly honest. They're not regulated, and therefore they're not backed by government guarantee. So there's a possibility of making money there, but whether you do or whether you can is another thing. So yeah, it's going to be interesting.
What I might do at this point is I've got another slide that actually has the top what they call exchanges that people kind of can go to either basically buy and sell Bitcoin or any other cryptocurrency. The all this stuff's going to be in our show notes as well, so don't kind of stress if you for the people that are listening, especially the people that are listening on the audio version and can't see all the slides that we're pointing to. Everything's going to be in the show notes, so don't stress about that. But what I have just put up on the screen now is like a comparison chart that has come from bitcoinreviews.com.au, so an Australian site that has all the pros and cons for all the top dozen or so exchanges. The ones that offer fees, don't offer fees, the ones that have kind of tighter regulations, the ones that have got high reviews, that kind of thing. It has also kind of the fees or the price that they charge people. Other features whether you can do online banking with it, whether they accept BPay, credit card type stuff, no sign up needed, issues around how they kind of identify people. So I know that you guys talked about it or touched on it in the Geeks Interrupted podcast you did last week. Yes. And one of the guys there was one of the concerns he had. I can't think of the guy's name. I think it was Andy, where he had the concerns around ID and he picked a particular exchange based on those things. So it's it's definitely worth researching. It's not something like where you can just go any, mini, miny, mo. I'll pick that one, because it's your money that we're talking about.
And this is a really good set of stats. You can see the one that's sitting at the top of the tree, which is CoinTree, has lower fees. They're probably aimed around, some different users, but they have a 2% fee. There's others that have less options, but they have a 0.5% fee. So there's a few options that are available out there. Obviously, you need to go through and have a look at what your intention is when you're using a service like this. Are you going to be a trader? Do you want to buy into it and then sit on it progressively and then get rid of it? There are some of the things that you need to decide when you're going into the Bitcoin market. So you can see there, as Shayne said, the bitcoinreviews.com.au will be in the show notes, which is actually, I haven't even looked at that website. That's a really good one. I have been reading a bit of text, but I haven't looked at the trading market in Australia. I know that in Melbourne, and there's probably one in Perth, Shayne, that there's a ATM machine that you can use with your Bitcoin wallet to turn it into cash. And I can tell you, I've never seen anyone touch that thing, but I don't really think it's the right market for it at the moment.
No, I don't know whether there is one at the moment. One of the kind of in the notes or the research that I did, I had kind of like a rhetorical question. Is Bitcoin? I mean, we keep referring to it and the others as a currency, but I kind of had like a little footnote saying, yeah, is it a currency or is it stock? Is it kind of like light? Is it a particle? Is it a wave, or is it both? It's not like you can. Well, you can, I guess, but not many people. It's not common where you actually can buy stuff with Bitcoin or any other cryptocurrency for that matter.
No, but it's a currency. I think it's a currency in the sense that it's. I don't think it is a currency. It's more of an asset, and you're pegging things on that asset. Like it's gone beyond. It's gone beyond a currency where it's actually used for real transactions to people are speculating on the value of it. Yeah. They're not trying to actually transact with it. I think that we're a long way before it matures. A cryptocurrency maturing at this point, there's a long way to go. And whether Bitcoin continues to be that one, because it's one of the early ones, or whether one of the other cryptocurrencies can create out there in the market, who knows? But really, it's a supply and demand thing. It comes down to how many Bitcoins are being generated and how many people want them. And if the generation of those Bitcoins starts increasing above what the market wants, then the price will fall. And that's a standard supply and demand economics question. I just have a concern of, particularly currently, is I just don't think it's a reliable. You can't reliably peg it against something that's going to happen. In the Australian economy, there's suggestion that in 2018 that they'll increase interest rates, which in turn shows that the economy seems to be chugging along quite happily, because an increase in interest rates means they want to slow down growth to a manageable level or halt it, but in our case it'll be slow down. That means that the economy is going really well, and in turn it means that the Australian dollar generally will improve on the open market. We saw in 2009, 2010 period, even going through to 2012, the US dollar had dropped well below to parity with the Australian dollar. You're getting 1 for 1, if not more. Whereas now that that market is increasing, and you can see tangible elements of that market recovering, which then gives some confidence in those decisions. At the moment, it's speculation with cryptocurrencies. That's where the big failure is.
Yeah, well, it is a big failure in that I think that's because we're used to economies doing a certain thing, stock doing a certain thing, currency doing a certain thing. Because as we've been saying, it's tied to other things. So something happens here, and then the currency does X over here. When cryptocurrency and everything was first kind of thought of as an idea, one of the philosophies behind it was the fact that it wasn't tied to a particular government or country, and that was being sold as a benefit, because the theory was, I guess, there was less chance of corruption, there was less chance of bigger countries like US and China and Europe and influencing, I guess, the currency in a particular way, like it does, with regular currency. So it's kind of it's a double-edged sword, I guess. You can't have the freedom of it not being tied to a country without the downside of it being the fact that it's so volatile and it's up today and down tomorrow kind of thing. Versus you have it tied to a set of circumstances where it's more predictable, then you're running the risk of the bigger countries kind of taking over and kind of influencing it one way or the other.
Yeah, look, it's interesting times ahead. There was one that, in terms of whether companies or countries can influence it, there was, we talked in part of our prep that the Australian Reserve Bank had considered creating its own Australian dollar-backed cryptocurrency, and there was a reason that they decided that they would do that, and there was one. It says here the governor. The thing is, Bitcoin is not limited in terms of what's out there. So, if you were to say, for example, everyone who held Bitcoin now decided to convert that into Australian dollar cash amounts, it would cause major problems in the Australian economy. And they were saying here that the governor of the Reserve Bank, Philip Lowe, actually raised the prospect of people starting a run on Australian banks. If you've seen Mary Poppins, you know what a run on a bank is. Everybody tries to get their money out once in a panic. Because a bank can't pay back all its depositors at once, it doesn't just sit on the money, it makes loans too. A run on the bank can be a dangerous situation. If we were to issue electronic banknotes, it's possible that in times of banking system stress, people might seek to exchange their deposits in commercial banks for these electronic banknotes, he said. In other words, it might be easier to run on the banking system. This could have adverse implications for financial stability. And the article from Fairfax says, this is an extraordinary prospect for the Reserve Bank governor to raise. It may even be reckless. If the RBA's digital currency would be so much better than being with the banks, wouldn't that mean if there's a risk of a run on the banks, even if the Reserve Bank doesn't set up their own digital currency? So, it's interesting that basically one of the reasons for not doing it is that everyone said, well, we're going to take it out of the banks and just turn it into this cryptocurrency. It reduces the amount that banks have and therefore can have to effectively operate. And that could in turn bring down major parts of our economy. So it shows that it's really not a currency. Bitcoin and cryptocurrencies are not a currency, because they're saying, well, if you turned that currency into a Bitcoin or another cryptocurrency, it could crush the banking system. So that means it's not going from one currency to another. It's being completely removed and devoid from that system. So I don't know. I'm too conservative to actually invest in this sort of thing. I like property and walls and cars that actually just devalue. They never appreciate in value unless you've held it for so long in terms of But anyway, there's better ways. I personally think there's more stable ways of investing your money and diversifying your investments, whether it be through your superannuation if you're in Australia, through saving stocks, whatever. long term, it may not give you that massive 9,000% rise that we've seen in cryptocurrencies in the past year, but you're never going to go broke either. That's my opinion.
No, but I feel like that we need to kind of put a disclaimer in here saying that neither of us are financial advisors.
Of course. Oh, absolutely. Of course. This is my tech. So it goes back to saying it is my tech opinion. So we are providing an opinion rather than financial, tax, or whatever advice. We'll go, bing, 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 bing. We have to do that.
Yeah, exactly. Yeah. Then again, I mean, if people do take our advice, take what we said and make squeens of dollars, please remember us.
Oh, absolutely. Absolutely. You should give us money just to thank us. Like, just, if you've got a Bitcoin laying around now, just one each. We'll be happy with that.
Yeah. Yeah, exactly.
Yeah, absolutely. We'll do a live cross from our private yacht on the Mediterranean or something like that. Absolutely.
Yeah. So, is there any more that we've got to say on the topic, or do you think we've kind of covered?
I don't know.
Well?
I'm obviously this is not going to be live, but I'd be interested to know if anyone's come across our little podcast. I'd like to know what you think about cryptocurrencies. Have you invested? What is your experience been? Send us an email, mytechopinion@prosumerit.com. You can see it down the bottom of the screen, right? If I can point low enough to about there. There you go. That works.
Yeah, pretty close.
Maybe. Close. I've gone too far. But yeah, send us an email. We'd love to hear more about it. I think the short term is I am not probably going to get into cryptocurrency because I just don't. I think it's too late to get into Bitcoin. And can another cryptocurrency start low and build its way up, or are we really looking at the three that we've mentioned, and is that where it's going to sit for the time being? Who knows?
Yeah, exactly. I guess if you have too many, I mean, how many regular currencies have we got in the world? I mean, it's almost one per country, I suppose.
True, but we do peg it back to the US dollar a lot. So, look, you can't win no matter what you do.
No, exactly.
That's my theory.
So as Phil kind of touched on, if you've got any feedback for our first episode, keep
Sure.
in mind it is our first episode, so things will get better as the weeks go by and the episodes go by, and we kind of get in a bit more of a rhythm. So happy to accept positive feedback, constructive criticism, bag us if you really want to, but constructive criticism would be appreciated. If you've got any ideas for any upcoming topics, any other sort of things that you want to really don't know about and you want us to kind of cover in the deep dive section, again, send us an email to mytechopinion@prosumerit.com.
Absolutely. We will be on iTunes podcast, so make sure you get your reviews in there and keep an eye on our website for any updates as well. So make sure you have a look at that. So prosumerit.com, and I think it's /MTO. Does that sound about right?
Yeah, /MTO for My Tech Opinion in particular. And as we covered at the beginning of the show, the idea of prosumerit.com is to cover things like reviews and blog posts and that sort of thing. But we're going to kick it off just with this show and see how things go from there. We've also got, you can get us on Twitter. The network is @prosumerit.com or @prosumerit rather. The show will also be posted, the video portion of the show will be posted on YouTube at youtube.com/prosumerit AU. The important bit at the end there is AU. And that'll be where the video gets posted. As Phil said, the show will also be up on iTunes podcast. And there's something else I've missed. Oh, the important thing, the Facebook page. Facebook.com /prosumerit. Again, where you'll see posts about random sort of tech stuff and anything related to the show or anything else that Prosumerit does.
Absolutely. So we're going to continue to have our regular podcasts on here. As Shayne said, we will improve, and as we get our flow in, we'll get better over time. So we appreciate your feedback on that as well. So I think that's about it for this week.
I think episode number 1 is done. And
In the bag.
Yeah, in the bag. Or as Leo would say, yeah, in the can. I don't know if we can actually steal that from him. He's probably got that trademarked or something.
That's right.
Yeah.
That's fine.
But yeah. So until then, I guess we'll see each other next week.
Absolutely. We'll see you on the next episode of My Tech Opinion. This is Phil Edwards and Shane Johnson in Perth saying, have a good night and have an enjoyable afternoon. Wherever you are, whatever time you're listening. See you, everyone.
See you later.